Energy is now viewed because the next fault line for global markets. This year's standout inflation alternative backing commodities is coming beneath stress on problem a recession will cut back call for raw substances. That's the view of Mandy Xu, head of fairness derivatives approach at Credit Suisse Group AG, who stated derivatives market bets for crude display developing speculation that the deteriorating financial outlook can also outweigh supply challenges. Even the maximum supply confined commodity, which includes oil, what we've began to peer in the derivatives market is human beings beginning to price in extra downside chance, Xu said in a television interview. Xu cited a degree from the options market referred to as the position skew, the premium a purchaser need to pay to guard in opposition to a decline in prices as opposed to a upward push. She mentioned the hiking skew signals concerns about disadvantage dangers to worldwide growth. Everything from business metals to crude oil has tumbled this month, pushing down a gauge of commodities to the bottom level due to the fact that March fears that tightening U.S. economic coverage will cause a recession are gripping international markets, overshadowing demanding situations dealing with uncooked materials. The solely region up at the year is strength, and that is what we've been highlighting for more than 1 week now in terms of the subsequent capacity pain point for buyers, Xu stated. The danger of recession method that further upside within the area is likely restrained. The strength zone in the S&P 500 is up 32% this year, the sole subgroup of the index still inside the green. But a much broader debate is now raging about the outlook for oil expenses. Goldman Sachs Group Inc. NYSE, GS. Stated in a Observe on Tuesday that call for continues to be strolling ahead of deliver, warning the Fed can't print commodities. Weaker demand others are extra bearish. A declining fee profile throughout most mining and power commodities is justified in mild of a weakening demand outlook, said Vivek Dar, a commodities analyst at Commonwealth Bank of Australia (OTC, CMWAY. The outlook for growing prices is possibly contingent on China enjoyable its COVID-0 policy, he wrote in Observe Thursday, relating to Beijing's choice for mobility curbs to stamp out virus outbreaks. That course beforehand for raw material expenses is important to global markets. Sustained declines might also help scale down inflation expectancies and allow significant banks to graduate the tempo of interest rate hikes, potentially bolstering shares and bonds. Falling commodities need to be welcomed, as it breeds disinflationary pressures, Chris Weston, head of research at Pepperstone Group, wrote in Observe. This dynamic turns into far more bullish for equities if it's driven by way of the notion of growing supply, now not call for issues, which appears to be the case now. Copyright 2022 LP.